As we move closer and closer to the global economic reset, this is one of the key entities to be paying attention to. So we're going to be looking at the potential death of the metals market, because you have to understand that implementing Basel III has been postponed and postponed and postponed. Will that implementation of this part of Basel III boost gold and silver prices? The current schedule for full implementation, well, right now it's the banks in continental Europe that this part, and we're just going to focus on the gold and silver part for today, but that would be implemented in continental Europe. Lest you not think that that would impact us here, you know that the entire global banking system is incestuously interconnected. So it does not really matter where it happens, it's coming home. British banks are supposed to begin the implementation in January 22, and all changes are supposed to become effective in, what year is that? Oh yeah, 2023. Now, what else is happening in 2023? Well, we've talked about the LIBOR and the need to restructure all of the contracts that mature after that certain date. Well, that's been postponed until 2023. Anything else? Oh yeah, the Fed anticipates having the digital dollar ready by 2023. What you need to know is the LBMA is the largest gold and silver trading platform in the world, trading, roughly 5 trillion annually, not in physical because there's not that much physical out there, but in contracts, derivatives, which are just a bet. You cannot convert a derivative contract into the underlying asset. The COMEX here in the US is the second largest gold and silver trading platform. Virtually all of this trading is in the form of unallocated precious metals, which means you might own them and they might be holding them, but they're not held specifically in your name. That means that they're really using the fractional reserve system. Oh, I have this 1 ounce of gold. I think I will trade, 100, 1,000, 62,000 gold contracts against this 1 ounce of physical. According to the Bank for International Settlements, for every 1 physical ounce of gold that exists, there were 62,000 derivative contracts. So I wanted to just specifically look at gold's role in Basel III because it moved up to a tier 1 or virtually risk-free asset. Well, this is risk-free, and it holds no counterparty risk. I hold it, I own it outright, and it's invisible. And I came across, I wish I'd come across it a little bit sooner, but that's okay, a great piece, again from the biz, on gold's role in the central bank's reserves, and we're gonna come to that later. But it has physical gold, has been given a 0 risk weight, because gold bullion held at the bank or held in another bank on an allocated basis. In other words, if another bank is holding this, my name is on that coin. So they cannot trade that coin, unlike the unallocated. To the extent the gold bullion assets are backed by gold bullion liabilities. Okay, so I hold it, I own it. 0, that means you don't have to have any reserves. It's treated like cash, okay? Actually, cash owned and held at the bank or in transit. Also, 0 risk weighting. And also, which I love, we've talked about, if you've been watching me for a while, we've talked in the past about maturity mismatches, and they would no longer be allowed. So this is like an instantaneous thing. But a spot contract can go out months. that's a mismatch, right? So short-term assets funding long-term debts, no, not anymore. Gold, because it runs physical gold, because it runs no counterparty risk, is eligible for collateral. But it requires a provable 1-to-1 ratio. You have the asset, you have the liability. It actually exists. You cannot do fractional reserve banking with this. This is huge and not what they'd want at all. Now, of course, the Bank of England supports this, is reinforced by it, and they say that these are just proposals to implement the Basel III standards on counterparty credit risk. It is really, this whole Basel piece is about a revised framework for capital requirements. In other words, how much do these banks have to hold in reserve? Because right now it's pretty low, especially on the unallocated accounts that they get to leverage many times over. And this is where the date comes from as well. But it is the review that's expected to be completed by the end of this month. Okay, now, and it's a proposed implementation. So there's not a guarantee that this is going to actually go through. Let's see. I mean, I just don't think they're ready yet. I'm not saying that this is, nothing, because it is definitely something. But I think that this would be a lot more valuable to the powers that be when they're ready to reset, do an overnight revaluation of the currency, because they always do it, the fiat currency against gold. But if they did this now, would this kill the paper gold market? Well, yeah, because it's going to eliminate the ability to suppress the real true price of both gold and silver. And the LBMA is warning the Bank of England. I mean, this would really, actually, if they did, it isn't just the gold and silver market that would be impacted. It would be all markets. I really do want to say that I don't think they're ready to crash the system this week, or this month rather, but it's possible. I did not think that in 2008 they would allow my alma mater, Lehman, to go out, and they did. So I can't guarantee that they won't do this. But we'll see. We'll see. It's going to be a very interesting month. It's been an extraordinarily interesting year. And we'll just keep riding this and paying attention and see where we go.